Hi, the Indian hospital industry has seen a ramp up in private equity investments with deals worth over 27,000 crores in the last 2 years as per the graph. The hospital stocks over the last few years has given returns between 120% and 650%, making it one of the best performing subsectors in the healthcare space. This was driven by rising occupancies, rising RPOPs due to rationalizing patient mix, rationalizing bed mix, and also performing higher end complex surgeries. To know more about the hospital sector, come join us for our True Blue webinar on 23rd March 11 a.m. Thank you.
The capitulation of defensives. We are all schooled on the belief that some sectors are defensive and we can invest in them without facing a downside. The entire buy at any price philosophy is based on this premise. But once or twice in every decade, this premise gets tested very, very badly. I still remember 2009 as a point of reference. FMCG had not participated in the 2008 bull run. Pharma had not participated. IT had very marginal participation. But post 2008, when the markets fell, these sectors which had not participated in the bull run also experienced a capitulation. And when inflation went up subsequently in 11 and 12, the capitulation continued. So you got an opportunity to buy these stocks at valuations which we did not anticipate. This was more marked in pharma and FMCG. The IT capitulation had more to do with global factors and didn't exactly synchronize with the pharma and FMCG capitulation. Exactly when you expect the capitulation will not happen, it will present itself before you. Inflation is a very big catalyst for such a capitulation. Either inflation should be rising or it must refuse to come down. When it is rising, it tends to put pressure on companies. It slows down their growth. It brings volume growth to literally zero or even marginally negative. And companies also are not able to pass on the inflation to their customers. When this happens for a few quarters, markets lose patience. And that patience is so important that when the markets lose it, it leads to a capitulation in stock prices. It just needs to be a trigger for large investors to start selling, because they are always running to beat a benchmark. Remember that. And those who are raising a benchmark don't want to be invested in sectors which can see even a 10% downside. And when it becomes very difficult to generate returns, they book out, they sell and get out. And when they sell and get out, there is an impact cost. And that impact cost leads to a capitulation in the stock prices because others also sell, seeing this large institutional selling. Go back and think about how the capitulation ITC happened to 140 rupees. Of course, there was the COVID scare, but there was also the selling by the FIIs who lost patience with ITC. In 2009, 10, 11, it was Hindustan Lever, it was Pidilite, it was all these companies. Post demonetization, it was Titan. Pharma sell-off happened between 2015 and 2017-18. The capital goods sell-off happened post 2018 bull run because capital goods had not even participated in the bull run. So today you are going to see a capitulation in some of the defensive stocks. When I say today, I don't mean immediately, but it's coming. And when the capitulation of defensive stocks happen, it could potentially be an opportunity to buy them and hold them for very long periods of time. In my opinion, a defensive stock should not be purchased for a bounce. It should not be invested into for a trade. it should be invested into at the right valuation and then intentionally owned for extended years. Very long periods of time is what you must aspire to own such stocks for. And when you aspire to own such a stock for a very long period of time, the valuation at which you buy it is super critical. You must be very correct in what you buy, which is why I have been always against the buy at any price philosophy, as it would cause a lot of harm to people who effectively don't maintain the required discipline or get carried away by high indiscipline even in the best of companies. We have seen the best of companies and how they traded in the last 2 years and how people bought them in an indisciplined way, either individually or institutionally. The time is coming when there will be a heavy price to be paid for such indiscreet, irresponsible investing. But that is not the purpose of this video. The purpose of this video is to alert you to the opportunity that will present itself before you when the capitulation of defensives happen. When it happens, you must be alert to that opportunity and you must use that opportunity effectively to build positions in companies which give you a decadal opportunity and for you to participate in those companies adequately. As an investment manager, I always like to prepare myself for such opportunities so that when the opportunity presents itself, I am mentally and financially ready to participate in them. I would always ask my customers for capital during those times so that they contribute money which would straight go into those opportunities at what I think are the most opportune moments. Let's see how this opportunity presents itself in defensives and how that capitulation is effectively utilized by every one of us. Thank you for watching this video.